KEI Industries, that's a stock on our radar. The company had reported a decent set of numbers in quarter four. They are guiding for 16 to 17% revenue growth for the coming year. To discuss how demand's outlook is shaping up and how's the order pipeline as well looking, we have Mr. Anil Gupta, the Chairman and MD of the company, who joins us on the show. Hi, Mr. Gupta. Good morning. Thanks so much for joining in. Well, you had guided for around 16 to around 17%, and that's pretty good. But given the fall in commodity prices, there could be some tapering off in terms of prices. Do you still stick to this revenue growth of 16 to around 17%? And if that's the case, then will you be factoring in higher volumes than you factored in earlier, because pricing has come down a little bit?
Good morning, Nigel. I guided for 16 to 17% revenue growth based on certain, price levels persisting at the end of quarter four. Now, if the price, but we are still sure that we will be able to maintain a volume growth of 16 to 17%. If the prices goes down considerably, then we are more concerned about the volume growth instead of that just the value growth and also margins. So our effort will be to maintain the volume growth and the EBITDA. That will be.
Okay, Mr. Gupta, so pricing has come under some pressure because the input costs have cooled off. So volumes you're guiding for around 16 to 17%, but on the revenue growth, could you give us the number, given the softening we're seeing at prices at current reckoning? What kind of a value growth would it mean? And also lower input costs and operating leverage will be good news for margins. What is the margin number you're looking at?
See, at the current level of prices, I still see a revenue growth of 15 to 17%. We should be able to achieve. So far as margins are concerned, our guidance will be anywhere between 10.5 to 11%. Because so far as lowering of the raw material prices are concerned, but we always have inventory in the retail stock, and we always have booked orders, and we always have competition. So we are a little conservative in giving guidance, but definitely we'll try to achieve 11% EBITDA in this year.
Okay, 11% EBITDA in terms of margins this year is something that you can achieve. You also have a major greenfield expansion of 800 crores, Mr. Gupta. And first of all, welcome to the show. Thanks for joining in. There's an 800 crore expansion that you're looking at. Tell us a little bit about that in terms of a timeline, execution, and also what is the revenue potential from here?
This expansion will be anywhere between 800 to 1,000 crore. It is coming in Gujarat, in Sanand industrial area of GIDC, where we have already procured the land, and construction activities are likely to start in July. It is still at the planning stage for the architectural point of view, and we envisages a turnover of around 4,000 crore over 3 to 4 years from after it is operational after 2 years. Then it will give a revenue of around 4,000 crore a year, but in a graded manner over a period of 2 years. And then by debottlenecking, it can go up further to 5,000 crore. It will be a mix of cable, HT cable and low tension cables.
Okay, so you're saying 2 years down the line. So maybe from FY27 is when you're expecting a 4,000 crore annual revenue from this greenfield project?
I think it will be an FY, 24. No, FY26. It 26. Should start.
Okay, got that. And in your EHV segment, there was a degrowth in revenues of almost 25%. You had spoken about some delays in large orders. Can you tell us what is the status currently? I think your order book is about 850 crores. If there was a degrowth earlier, do you think those orders will get executed in the subsequent quarters? And what could the quantum look like?
Certainly, it will be executed in this year. And there is a good, order pipeline in extra high voltage cables. And we expect a revenue of more than somewhere around 600 to 650 crore in this segment. In this financial year, we have a good order book and good pipeline.
Mr. Gupta, just to kind of put that number into context, so you buy, what will the total size of the business be by, say, FY26, sir?
I think by FY26 we should reach around 10,000 to 11,000 crore rupees. But once this Sanand plant starts, then it will be a major pickup. And because we are focusing on major exports from there because at the moment we have a lot of export opportunities, but we are not able to build it up because of the capacity constraints. We are hyping up our capacity in our existing plants by debottlenecking and by doing brownfield expansions. And from that, we will get around 15% revenue growth year after year, this year as well as next year.
So you ended with about 7,000 crores in FY23. You're saying by FY26, post the revenue from this new Sanand facility, you'll go up to about 11,000 crores. Should be round about there.
11 first year 11,000 crore and then gradually scaling up that facility.
Okay, got it. Mr. Gupta, just let's step back a little bit. I wanted to understand from you, what is the big, which business segment is the big opportunity going to come from for you? Because globally, what one is reading is that the main problem, right? I mean, if we're going to see a lot more renewable capacity being set up, coal-based plants, etc., take a backseat, the big sort of not problem, but the delay is in getting the power from these renewable plants to homes where the power is needed. And that requires grids, and that requires cables, because these are not, you need to replace one coal power plant. You need, you need more than a few renewable units, be it wind or solar or whatever. And these are usually located not at the center, but slightly away because you need a lot of land. So connectivity requires a lot more grid, and that requires cables. Is that something which we will see here in India as well? Is that already happening? Could you give us an update?
Of course, this is happening, and the major cable requirement is coming from solar power plant and also from the power distribution side. A lot of distribution strengthening is being undertaken by all the power distribution companies. Apart from power, we see a good demand coming up from industrial sector, refineries, steel, cement, and also the infrastructure like railways, like metro railways and suburban trains. Then construction sector is also picking up, and we are seeing a good demand coming up from that. In overseas sector, it is the solar power which is driving the growth, and also the power sector. A lot of cables are needed overseas also in the power sector, especially in America in the infrastructure rebuild.
Okay. All right. So the theme is looking up. KEI Industries is headed in the right direction. Mr. Gupta, I wanted to ask you about pricing. Now, on the retail-facing business, on the retail side of things, I understand that your pricing is at a bit of a discount in comparison to your peers. You could correct me out there. And you could tell me, what is the strategy from here on? Do you look to bridge that gap? Because on the margins, you're looking to bridge that gap. Margins as well are relatively lower. So on pricing, what is your strategy from here on? That and also exports, as a percentage of your revenues, I think they're in early teens. Where do you see this number headed?
So first of all, margins in the retail side, we are trying to improve our margins by approximately 1% in our house wires every year after year. And so that will bridge the gap between our peers in next 3-4 years. Regarding exports, what was your question about exports?
On exports, it's around 10 to 12%, I think, right? As of now. So where do you see this number headed? Given that you're saying from 7,000 crores, you'll go to 11,000 crores. So what will the contribution be from exports? And also, sir, you have commented on margins, but on pricing, you've not commented. Will you continue to remain at a bit of a discount in comparison to your peers?
For 1 or 2 years, yes, until we come up as a brand to the same level. And so we'll definitely bridge the margins. And in the exports, we expect that this year we expect to reach 12% of our sales from exports. And going forward, as we are able to build up our capacity, we aim to achieve 18 to 20% coming out of exports of the total turnover if once our Sanand Ahmedabad plant starts.
I also want to understand, because there's so much focus on the railways, right? And the government is speeding up their order wins over their order execution there as well. Can you quantify the opportunity that you are getting from railways and rural electrification?
railways, major opportunity is from, platform rejig, then secondly, the suburban trains and metro rails. So far as mainline railways are concerned, most of the electrification is done by overhead traction. So the cabling demand per se is not very big, except signaling cables, which goes up in that. So that's about railways.
Okay, all right. Sir, thanks a lot for joining in, and have a great, FY24. Your stock has given very good returns in the last 12 months. The stock is up almost 80%. Been a big wealth creator, and management is quite confident that the business will continue to generate good results. Let's slip into a quick break. On the other side of the break, one of the other big mid-cap movers has been Raymond. Amit Agarwal, Group Financial Officer at Raymond, will be joining in to discuss the business and demand outlook. We will also connect with Ramesh Srinivasan, who's the Managing Director and Chief Executive Officer at Kotak Investment Banking, to discuss major trends in the M&A space. Stay tuned.